In fact, let's welcome on board Arun Jain, the Chairman and Managing Director at Intellect Design Arena on the show and talk about exactly these parameters that Varun just highlighted. Mr. Jain, hi, good morning. Good to have you on the show. And first, wishing you a very happy and prosperous new year from Team ET Now.
Same to you and all the investors. It's a happy decade going forward.
Thank you very much. Just looking at the IT landscape, Mr. Jain, and large cap IT clearly seems to be on a huge growth path. BFSI going digital is happening across the world in a big way. Are small and mid cap IT firms such as yours also set to follow suit? And could we see a huge leap for companies such as yours as well?
Thank you for trusting Intellect. I think you have done a very good research on it. There are few tailwinds which are there in the world market. First is around cloud adoption, then AI. These are the disruptions happening in the technology space. And these two disruptions, cloud and AI and machine learning, are the major disruption, which is driving a very high digital adoption. And COVID has accelerated that journey. So whatever we are supposed to do in our business plans in 22 is being preponed by 18 months because of the COVID. So it's a positive for the IT companies overall landscape, because now it's not about digital outside the bank for the customer, it's digital inside the bank for their own employees, because employees are also not able to participate and come to the office itself. So it's an end-to-end digital, which is creating a great opportunity. And with the two major disruption of the technology space is a further accelerating the higher investment in this space, and which is being leveraged by large IT companies as well as for Intellect, which is having a product assets which we can multiply, because it's a licensed business. Licensed business has a ability for generating much bigger recurring revenues. As of now, our recurring revenues are close to 450 crores. Our annual recurring revenue from subscription revenue and AMC revenue, and this recurring revenue comes at a margin of 80%. So that's quite a good mix when we try to look at Intellect journey in last quarter results.
Okay. Mr. Jain, the recent deal pipeline, let's talk about that as well. The kind of large deals versus small deals that are on the anvil, what the executable order booking is looking like at this point.
Yeah, so Intellect has invested close to 1,700 crore in sales and marketing. Our focus was, as a product company, the Europe and Americas, the advanced market spend almost like 70% of the IT spend comes from the advanced market. And being a product player, entry to that market was important. Our more than 56% business comes from the advanced market. And that advanced market gets a deal size which is bigger. So I put up the 41 deals which we are pursuing, or which you call destiny deals. And these destiny deals are in the range of 3 million to 10 million to 15 million, almost like $3 million to $20 million each deal size is the value of these deals. And I think that's where we have able to move the needle of an Indian product company from a range of $500,000 to $3 million deal sizes to $3 million to $20 million range sizes, where license value could be as high as 30 crore, 50 crore, 70 crore. And that comes directly to the bottom line. But initial investment of 1,200 crore in R&D in building these products is quite a good, providing a tailwind. So our 41 deals, a lot of it in the advanced market. Our leadership products, which are their liquidity, we are number one in the market. Digital transaction banking, we are number one in the marketplace. Central banking, we are number one in the marketplace. So 3 products out of 12 products, we are now getting the number one status in the marketplace. And once it is number one, our sales cost comes down because it's more of a pull deal than the push deal comes into picture. So that is what is the kind of a deal landscape we are looking at. How do we build up a sustainable business model? I think sustainability, predictability, and with a margin and cash. All 4 parameters in last 2 quarters you have observed are growing very, very decently. So I am happy to see our teams are performing significantly on the marketplace.
Okay, so that's the deal pipeline and what it's looking like. Also, if we were to look at the kind of traction that you're seeing with digital banking, if you could talk to us a little bit about the GTB segment and what the uptick is there.
Yeah, so GTB, I have mentioned two products, digital transaction banking. The corporate side, they are jumping into doing most of the transaction like HDFC Bank, or I was just listening to the previous interview from other banks. They are looking to make online corporate online for doing all the transactions, their payment transactions, their receivable transactions, their liquidity transactions, their trade and supply chain finance transactions. So we are one of the only player in the market which has got a one single architecture-based solution, which we call DTB. And that product has been, we won in last 4 years, out of 57 deals in the marketplace, we have won more than 24 deals in this space. And second player has won only 5 deals. And then it's distributed among multiple players. And that's where I think we have a differentiation, where GTB is getting traction, because this product we are able to implement fast and driving the bank significant upswing in fee-based income rather than a arbitrage-based income. So that's a digital adoption which is happening. This has moved from Asia Pacific to Middle East to Europe, now to Americas. So we were good presence in Canada, but in last 4 quarters, our entry to USA also has established, and now we have a close to 11 accounts in USA which are using Intellect as a software, so which is a very big entry to get into US market. And that, because in any product company to get into US market is the most critical piece. There's a lot of entry barrier in US market. Most of the companies in product have acquired other company. Intellect has done organically that kind of a piece. So that's a digital advantage we are getting. We are the right company at the right time. Our investment, which we made in 2015-16 after letting go Polaris, is paying off very well right now.
Mr. Jain, what's your visibility on the license stream for the second half of this year? And are you satisfied with the kind of momentum that you're seeing in licenses?
Yeah, we are satisfied with the licenses. I think we are in quite a good situation. A lot of deals are there, which are now getting closed. And contracting takes a lot of time. So that we are in some closure, some contracting stage. So we are healthy right now on second half. As what we look at first half, second half, we are able to get a good traction. Currently, our EPS is around 18 rupees as the EPS. I think this EPS comfortably can go 30 to 40% year on year for next 3 years. That kind of visibility is very clear.
And so if we look at the overall pie, then how much would SaaS be for the next year or so, and how much would the contribution be from AMC?
We are healthily growing about, AMC is going around 15, 16, 17% year on year. So currently AMC is 300 crore, 75 crore in the last quarter. So that may go 15 to 16% year on year. Cloud revenue are close to 140 crore annually. It's all organic. This may grow up to 200 crore next year.
Mr. Jain, also wanted to understand, you've recently done a lot of restructuring in the business to bring down the costs, which became clearly evident and visible in the second quarter. Would you say that this is a sustainable trend, and would that be the focus area going forward as well?
Yeah, so we restructure the cost, but more restructuring is done when the lot of investment has come down, because our R&D cost last year was substantially higher because we prepared our products for the better R&D. So we cut down we completed those R&D projects. So that has automatically come down the cost. In a product business, these costs are always not proportional to revenue. They are more front-loaded. We invest very high in the beginning, and then we have a lower cost once a product becomes mature. So the cycle is that the more customers are using product, more mature it becomes. more valuable it becomes, more referencing it creates. So it's a cycle which some other company like Oracle Financial Services or Info Edge, they are taking the advantage of it. That is the advantage which comes onto second phase of cycle. So first phase of 5 years is getting over in 2020. Now second year of phase is the monetization phase, where all the investment in R&D, where we have a lowest cost of R&D compared to any of our competitor in the global marketplace. We are investing close to 120 crore, which is just $15 to $17 million per year on R&D for 12 products, which is less than $2 million per product per year. Is one of the lowest cost, and we have a very high efficiency from our Indian team, which is committed in Intellect. So that's the advantage we are leveraging.
Your company clearly, Mr. Jain, has been reaping the benefits of your past wins. If I look at, cost cutting, the AMC tailwind, are we seeing anything meaningful changing in the post-pandemic world that might create larger opportunities for you? Where within BFSI would you say that you're seeing the largest market for you in the coming years?
The largest market will be US. We have built up a AI machine learning molecule on underwriting space. We have invested close to $40 million in last 4 years in getting into the artificial intelligence machine learning data space. We have a unique space where we have a document extraction as well as data ingestion space, which is unique. Novarica has rated us better than 20 AI players in America. And this is based on a cloud. We have around 11 customers working on this cloud in America. Now, this could be scalable opportunity because we don't have implementation there. This is a hockey stick, which we are now looking at it in 21 and 22 to be taken to entire America market. Good pipeline. And being our accuracy of data is 93% on data, which underwriters loving it because they don't get a data more than 80% accuracy. And that's where our unique proposition is emerging, which can be quite a valuable asset for us.
We'll leave it there. Thanks so much for joining us on the show today and taking us through how things are evolving.